So economic growth in the UAE is set to remain buoyant, expanding by 5.1% in 2025, up from 3.8% last year. This is according to the latest Q2 economic update from the Institute of Chartered Accountants and England and Wales, forecast produced in partnership with Oxford Economics, highlighting a strong rebound in oil production alongside robust non-oil sector momentum. Let's get a bit more on the report if we can. From the ICAEW Economic Advisor, Chief Economist, Managing Director of Oxford Economics Middle East, Scott Livermore, kind enough to join us live in studio. Scott, good to have you with us on a Tuesday morning. Thanks for joining us.
Good morning. Nice to be on again.
Really appreciate the report as well. And I suppose if we're looking for a sort of a macro rather than a micro, an overview on this one, this is a forecast of positivity, which seems to be in stark contrast to a number of the other reports coming out globally at the moment where the headwinds seem to be going the other way.
Yeah, I think that's right. I think the region is bucking global trends in two ways. Firstly, we're revising up growth forecasts. And secondly, we expect growth this year to be stronger than last year. In the report, we highlight two factors behind that. Firstly, the OPEC Plus decisions, the 400,000+ barrels a day increases that have been announced for the last few months are a lot higher than we were expecting, and that's pushing up GDP growth in the oil sector. And we expect continued robustness from the domestic economy, support the growth and diversification policies, and those challenges facing the rest of the world from President Trump's tariffs, we're much less exposed to in this region. So therefore, overall, it is a positive outlook.
Saudi Arabia, tracking up?
Saudi Arabia, similarly, strong growth. Clearly, there are concerns in Saudi Arabia about the fiscal position, given low oil prices and production. But overall, there's fiscal strength. The fiscal position in Saudi will be envy of some countries in Europe. And while they shouldn't be complacent, they still can continue to pursue Vision 2030. And we expect growth in the non-oil sector around 5%, similar to here in the UAE.
Which is significant, isn't it, given the fact the Saudi economy, like so many economies here in the GCC, are intertwined with oil output as well. But that we've seen the expansion of that non-oil sector in Saudi Arabia in recent years, and that certainly seems to be tracking, again, upwards at present.
Indeed, and it's benefiting the whole region. We saw trade figures released yesterday for the UAE, and there's a significant increase in exports from the UAE to Saudi Arabia. So it's very much that Saudi is helping drive the region as a whole, and we expect that to continue in Saudi. Saudi may consolidate, Saudi may refocus, but growth should be strong still.
So let's have a look at the UAE if we can. As I mentioned a little earlier on, growth projected around about 5.1%. Interesting that tourism is still very much to the fore there.
Well, tourism's a backbone. Our sister company, Tourism Economics, announced a report highlighting how we expect that to continue to grow strongly. The region's competitive, slightly weaker dollar makes it a little bit cheaper to come here, which is positive. Clearly, all of this has to be seen in context of geopolitical tensions, but underlying, travel and tourism will continue to be a mainstay of the economy.
And is that going to be the same moving forward? I mean, looking at the sort of tourism pipeline, if you like?
Right. I think there's a big focus on travel and tourism. As I said, the country is competitive. We're expanding capacity, and that's likely to be a continued driver. Clearly, UAE is looking at lots of new sectors and an innovative economy, but that's to complement sectors like travel and tourism, which have been the backbone of the non-oil economy.
Talking of pipelines and investments as well, obviously very highly documented visit from Donald Trump recently in May of this year. Some big AI collaborations. I mean, are they all sort of filtering into the numbers already yet or not? The sentiment at least?
Well, sentiment, it's positive sentiment. Yeah. The UAE is clearly seeing the benefits of having a strong relationship with the US. It's relatively little exposed to the tariffs, but there are investment opportunities and ability to gain. And what the UAE seems to be doing is investing in the infrastructure, getting chips from NVIDIA, but also thinking about the human capital that's needed to run this with the general policies to attract talent, but also the kind of university and the centre of excellence that it's looking to establish on Yas.
Just to pick up on the tariffs things for our listeners and viewers as well, we hear this time and time again, the sort of limited impact that GCC could expect when it comes to US tariffs. Can you just explain to us why that is?
Well, I think one number probably encapsulates it. For the UAE, 2% of GDP is exported to the US, so it's a relatively small proportion. A chunk of that exports are energy related, so exempt from tariffs. And okay, the new tariffs on aluminium are going to hit that sector because 25% of those exports going to the US are aluminium. But as a share of the economy as a whole, it's relatively small. And clearly the UAE and the rest of the Gulf, competitive-wise, is being hit much less than other countries around the world.
A lot of positivity, as you mentioned there, and sort of bucking the trend globally in terms of growth outlooks. Can't get away from the fact there is a little bit of inflation, though, here in the UAE at present. I think the forecast was to average around about 2.5% this year. Is that manageable at the moment, price pressures?
I think on the whole it is manageable, and it may be a bit higher, but it's not a situation where we're worried about inflation. I think weaker global growth should weigh on import prices, offset against that weaker dollar, maybe slightly higher imported prices. And I think we're likely to see some softening in the rental market, which has been an important driver of headline prices in the country.
We focused on Saudi Arabia and the UAE with good reason as well. A lot of positivity coming out of them within the wider region. And again, I'm, conscious of the fact with geopolitical tensions and what's going on at the moment, it's always remiss to say. But given what you've seen at the moment, is the outlook, again, a resilience out there amongst the GCC economies as a whole?
Oh, most definitely amongst the GCC. Yeah. They still are in a fiscally robust place. They have mostly a clear plan to diversify and develop the non-oil economy. And at least over the next couple of years, there's no reason for the countries of the region not to stay the course.
And just that one word, that agility that you mentioned, that adaptability, is that one of the things that has seen the positivity when it comes to the markets here, that ability to move and adapt accordingly?
I think so. They've got two things really going for it. One, they have the financial means, and two, there's the vision. And that vision is a flexible vision which kind of allows the countries and the governments to pursue opportunities and be relatively nimble as opportunities appear.
Scott, appreciate the report, mate. Thank you very much indeed for that. Scott is the ICAEW Economic Advisor, also the Chief Economist Managing Director of Oxford Economics Middle East. Their new report is out, the Economic Insight Report for Q2 2025. It's the Business Breakfast.